Hey everybody, it's Paul here from Blossom on my channel Better Call Paul. Today is the third day of kind of like a 5-day series I'm doing this week from Monday to Friday. And basically that's because it's regarding my Daily Snowball Portfolio. Now I've had certain weekly pairs, mostly Yield Max and Defiance and Round Hill that all paid on Friday. But now I have my portfolio set up so that I get paid every day of the week. And not only is it exciting to get paid every day of the week, but I think there's been some people on Blossom who have proven that by getting paid daily and reinvesting the dividends into the next ETF that pays, you can snowball your income really fast. So I just really started doing this, and I'm really excited to see where I'm going to be in 3 months from now. I don't know if 3 months is a long enough time frame, but I have a feeling like we're going to see some really good results within 3 months. So today is Wednesday. So for Wednesday, I chose WPAY, which is Round Hill's fund of funds. And I think with the, endless number of ETFs that are being released nowadays, it's so hard for, at least for me, and I think for a lot of people, to keep track of all the new funds that have been coming out. And to try and buy them all would be nearly impossible. And trying to pick which ones are going to be the best, which ones are not going to do well, is also very taxing and time consuming. So when you have something like Round Hill's WPAY, where you can get all of their weekly pairs in one fund, I had to jump on it. I think this is a great idea. So let's just take a quick look at their website and see what it's all about. Okay, guys, first thing I want to point out to you at the top of the page here, you can see that WPAY management fee has been waived to 0% until at least September 30th, 2026. So that's great. We're saving some money on the fees. So this is the WPAY Weekly Pay Universe ETF. Invest in Round Hill Weekly Pay Universe ETF. WPAY for diversified exposure across all single stock weekly pay ETFs, designed for investors targeting weekly income and amplified performance. So the short overview here is the Round Hill Weekly Pay Universe ETF seeks to track the performance of the selective Round Hill Weekly Pay Universe Index. WPAY is designed to invest in the eligible universe of single stock weekly pay ETFs. So one of the advantages of an ETF like this is that you get weekly distributions, right? So WPAY distributes every week, offering a recurring income stream for shareholders. Diversification. So WPAY offers diversified exposure to the entire suite of the Round Hill Weekly Pay ETFs. It's seamless. WPAY is rebalanced monthly to equal weight, ensuring consistent exposure to all single stock weekly pay ETFs in a single ticker. So you could go out and buy all 15 of their weekly payers, but then you would have to worry about rebalancing it yourself. In this way, Round Hill does it for you. Okay, so as we know, the ticker is WPAY. They're using ETF options. The gross expense ratio is 1.28 and the net expense ratio is 0.99%. Now, you do pay higher fees for these type of ETFs, but when you consider how actively managed they are, in my opinion, it's worth the money. You can see it's been growing really fast, already at 257 million, and it was only launched on September 4th of 2025. Okay, guys, the top holdings, if you view all, you can see it basically lists all of the holdings, all of the single stock ETFs, right? So you have Amazon, Meta, Strategy. Why is this not rolling up? I'm sorry, I'm starting at the bottom. Start at the top here. You have AMD, you have Robinhood, Berkshire, Apple, NVIDIA, Microsoft, AVGO. Well, that's one I don't know off by heart. Netflix, Tesla, Google, Coin, Palantir, Amazon, Meta, Strategy, and then there's just some in government obligations fund. It's probably bonds, just cash. So get rid of that. Okay, they give you a list of the payouts, so you can see it pays every Wednesday. And here's the distribution history thus far. So it started off with 51 cents, then jumped to 88, then 73, then 85. It's hard to say what it'll be in the future, but if it can maintain, I would say, 70 cents or higher would be really nice. So today's Wednesday. We're going to just take a quick look at one of my spreadsheets, and we'll see how I've done so far this week and get a glimpse of what's coming up for the rest of the week. Guys, I don't know about you, but I'm very excited because I think this is going to be my best week ever, and that's probably because Yield Max decided to switch all of their ETFs to weekly. So instead of getting just Group A or Group B, we're going to get all of them. So at least I think that's why things are going to be much better this week than they probably will be next week. On top of that, some of the Yield Max ETFs are paying really well this week. So you can see here, guys, on Monday I got paid from blocks, now only $11.41, but I will be building this position. Tuesday I got MSTW, $28. And then today from WPAY I got $13.71. Tomorrow I'll be getting this is my new ETF is YBTC, but now Yield Max has moved their weekly pairs to Thursday. So we're going to get Alti, YMAX, and YMAG tomorrow. And you can see that YMAG is paying a really nice 20 cents. YMAX is paying 17 cents, which is a lot better than they've paid recently. And Alti is paying 9 cents again, which is fantastic. Alti, even though their share price has come down, their distribution has remained pretty consistent between 9 and 10 cents. Now here you can see QDTE and RDTE are having a pretty decent week again with 20 and 22 cents. And then I still have Defiance's QQQY and WDTE. And honestly, Defiance has really fixed these two ETFs. I know they have other ones as well, but these are the two that I own. And the share price is far more consistent than it ever was. And usually the payments are 19 and 20 cents. So this week, 21 and 23 is a nice jump up. And then all of my single stock ETFs from Yield Max are paying because they are now weekly. So I think that's why I've been able to bump up from up to 1171. You can see my average is only 761 a week. So 1171 means I'm getting almost an extra $400 this week. So that's fantastic, but I don't think that will be consistent for next week. I think it'll definitely be a little bit lower because some of the better payers, like Coney and Misty, I guess, will not be paying out as many weeks. It'll be dropped down to a weekly payer. So, guys, I don't know about you, but I think this Daily Snowball Portfolio is definitely the way to go if you are Canadian and can invest in a U.S. listed account in your RSP, or obviously if you're American and you're looking for extra income or you want to build your portfolio. Also, guys, as I mentioned at the beginning, I'm very active on Blossom. If you haven't yet joined Blossom, I would encourage you to do so. It's a wonderful social media app for people who are engaged in finances and they want to share their portfolios, or they want to ask questions, or they just want to talk to people who are like-minded. Maybe you don't have any friends who are interested in stocks and you want to talk about it. So then, check out Blossom. It is free to join. Also, guys, remember, I'm not a licensed financial advisor. I'm not encouraging you to buy WPAY. If it's something that you're interested in because you decided to watch this video, do your due diligence. Make sure you understand how it works. Make sure you understand some of the risks, because there are risks such as concentration risk. It only holds 15 stocks. That's not a lot. The fees are high, right? Because it's passively managed, but all of the underlying holdings are actively managed. So there are high fees and there's leverage costs. Also, it is a leveraged fund. So you have to realize that there's going to be a lot of upside, but there can also be downside risk. Also, it has a very short-term track record. So we're not looking at a stock that's been around for 20, 30 years where you can track the performance for that time period. It's been around for a very short time. So you have to understand that there comes risk with that as well. But otherwise, guys, I'm very excited about WPAY. I'm definitely going to add a lot more to this position, possibly bring it up to being one of my top 10, maybe one of my top 15 holdings. And I look forward to seeing how well this position does over the next, 3 to 6 months, especially if we end up in a bear market or a recession, to see how these funds respond. And I think they will do pretty well, but it's hard to say exactly how they will react afterwards. One other thing, guys, I wanted to share with you. I decided to look up to see what a swap agreement was, because that's what these funds are based on, as swap agreements. So I went to Chat GPT, so take this with a grain of salt. Okay, so I asked it what a swap agreement was, and it says a swap agreement is a type of financial contract between two parties to exchange or swap cash flows or liabilities from different financial instruments over a set period of time. Swaps are commonly used to manage risk, speculate, or change the characteristics of existing investments or debts. So then what I did was, guys, is I asked it, how is Roundhill using swaps for PLTW? So it says, here's how Roundhill uses swap agreements in its PLTW strategy based on disclosures in the fund's prospectus. PLTW is an actively managed ETF whose goal is to provide 120% of the calendar weekly total return of Palantir. Now that sounds correct. It also pays out weekly. That's correct. To achieve this leveraged weekly exposure, the fund invests primarily in total return swap agreements plus some direct PLTR stock. At least 80% of its net assets plus borrowing capacity are committed to these swaps or direct PLTR shares. So, guys, here's some more information. How the swap agreements work in PLTW strategy. So number one, they enter into a total return swap with a counterparty. And if you want, guys, you can freeze frame this and read all the in between. Number two is leverage and resetting exposure. So the fund doesn't just passively hold 1x exposure, it targets 1.2 exposure to PLTR's weekly return. That means it scales up its swap notionally so that its gains and losses are magnified. At the end of the week, the fund resets its exposure to ensure it remains approximately 1.2x going into the next week. So that means it will adjust the notional amount of swaps, increase or decrease based on how PLTR moved that week. Collateral and supporting investments. Because swap agreements are derivative contracts, PLTW also invests in short-term U.S. Treasury securities, Treasury ETFs, or money market funds. These serve as collateral or liquidity support for the swap obligation. These collateral assets help ensure the fund can meet its obligations or counterparties. So distribution mechanics and tax characterization. The fund's weekly distributions to shareholders are determined via a formula involving PLTR's recent total return plus implied volatility. A substantial portion of the distributions is expected to be characterized for tax purposes as return of capital. Well, to be honest with you, I'm not an options expert. I don't trade, buy, sell options, puts, or swaps. The reason I purchase these type of ETFs is because we have experts like Roundhill who do all this hard work, right? They do the hard work. We pay them the management fee. I feel like the management fee is more than worth what they give back to us, right? If you have an ETF that's paying you a 10% distribution, 15, 20, 25, 30, 35% distribution, and in some cases, there's really good capital appreciation as well. To me, it's worth the 1.5, or 2%, management fee expense ratio that they're charging. So, anyways, guys, I'm going to put a link to the previous video if you want to go back and see Monday or Tuesdays. But other than that, until tomorrow, bye for now.